association. Yeah, see, that's the association. Joe.
Welcome everyone to the YMA Nation podcast, episode number
6.
Episode number 6.
Number 6.
Number 6, and today is Real Estate Wednesday.
Yes.
It's your show today.
My show today.
Real Estate Wednesday.
Welcome everyone.
I'm Joe Wallace and
Rebecca Wallace.
And today we are going to discuss.
We are going to, this is going to be a good one today. You're going to love it.
Okay.
You ready?
Yes.
So we are going to discuss the requirements that you will need for a pre-approval.
The requirements that you will need for
a pre-approval.
To buy a home.
To buy a home.
To buy a home. Guys, before we get started, make sure you like, comment, and share, and subscribe. Like, comment, share, and subscribe. So take 5 seconds before she gets started and click the subscribe. It's right there in the lower corner. Click the subscribe.
Do it.
It's done. Good job. Now we can get started now. All right, guys. So today we are going to talk about the things that you will need to get qualified.
Right. For a pre-approval for the home buying process. And the reason I picked this subject today is because a lot of people just want to know, what do I do to get started?
Okay.
Right. And I say, well, we have to get you a pre-approval. Okay. So what does that consist of? Right. So we're going to break down what a pre-approval consists of and the things that you need to do on your end to ensure that you're even ready for that next step in trying to obtain a pre-approval. So the first thing is you have to have over a 580 credit score for a pre-approval. Is it going places?
Yeah, I mean, it's beautiful, but I just wanted to push it out the way.
So you have to have over a 580 credit score for a pre-approval, depending on the type of loan that you are trying to get qualified for. So what that means is if you are not aware of where your mortgage FICO score is, you need to get with either a credit specialist or you need to go to a credit monitoring service provider that's going to provide you with a FICO score so that you have an idea of where you're starting from. So That's number one.
So I need to know if the first thing I need to do is know where my credit is at.
Right, because that's going to dictate what type of loan you can get approved for. And if you need work on your credit file, what you need to do to get it to where it needs to be.
Okay.
Right? Okay, so
if I do need, I'm just jumping in. But if I did need help on my credit,
you could contact Masters Credit Consultants.
Okay. So I will contact Masters Credit Consultants. Right. I heard they're good.
They are awesome. And they would help you analyze your credit file and explain what you need to do to improve on your credit scores. For some people, it's building out their credit file. For some people, they have a lot of negative items, which we're going to get to that aspect as well. We're just going down the basics first of what you need to get qualified, and then we're going to delve into each topic.
So this company, Masters Credit Consultants, I heard some great things about them. And if you need to contact them, their number is 864-249-9466. I just happen to know it because I just heard so many great things about them. And their website is www.masterscredit.com.
Right. Right.
Okay, we can keep going.
Thank you for that information.
I want to make
somebody out there is going to need that information.
Exactly, and we want to make sure we provide them with the path.
And we're going to have that in there as well, right?
In the body.
In the
description.
So if you miss it, then you'll have a go-to link for it, right? Yeah,
you'll be able to read it down in the description.
The description. Yep. Yes. So call Masters Credit Consultants, and they'll walk you through your credit file
for free.
For free.
It's a free phone consultation.
Yeah. So, and they'll analyze your credit file because a lot of people don't understand how to read credit reports.
Right.
What they need to do to even get started building their credit. So, Masters Credit can definitely give you the expertise in that area.
Are you going to talk about how the credit impacts the interest rate?
I'm not tonight.
Okay, because I know you got like your timeline and your outline of everything that you plan.
I do.
But if we do have time to, then we can come back to it. But let's keep going.
Well, while you're talking about that and we're on the credit topic, I can go ahead and jump into what I had down next on my list of things to talk about.
You sure? I don't want to throw off your...
It's okay. It's all right.
Gotta be able to maneuver.
Yeah, I maneuver through this. One of the things that I had on my list to talk about is how to reach a 580 plus FICO credit score. And you have to have on-time payments. You have to keep your utilization down on your revolving accounts, or you need to obtain revolving accounts. A lot of people just don't have credit. I was talking to someone yesterday and they were like, well, I paid everything off. And I was like, so you don't have any open accounts? I was like, well, you have to start the credit building process over again because you don't have anything on your credit.
Why is that important?
Because the mortgage lender is going to base the pre-approval off of your credit history and how well you pay things and how you manage credit. And they're not going to want to lend to someone who they can't see has established credit, can manage money, or in a good financial place to even be able to buy a house, which I was going to get to that as well. You have to have your finances in order to be able to buy a house. You have to have money to buy a house.
I would think so, right? Because you're asking a bank to almost front me $150,000
$200,000
for a purchase.
Right. And you're wanting them to do that off the faith of what your credit is and what you have reporting on your credit. So if you have a car and you were late on your car payment in January, and then you were late on your car payment in March, and then you were late on your car payment in July, that mortgage lender is going to look at your credit file and be like, you can't even make your car payment on time. Why are we going to lend you money to go buy a house with?
Well, you're probably not going to make your home payments on time.
Right. And then you become a high risk to them. You become a high risk to the lender that you're asking to give you money to buy a house.
You also earlier, you talked about some of the things that they need. Revolving credit. So some people online may be like, revolving credit, what's that?
So we touched on this a little bit last week, but revolving credit is you can do secured revolving accounts with your bank, or there's certain lenders that will do revolving lines of credit. So it's basically when you're doing secured credit, you're taking your own funds and you're opening a revolving account that's an open line of credit to those funds, and you can utilize that to make purchases with, and then you make payments back onto that revolving account.
So a revolving account is like a credit card or a line of credit. Because I know there's some people out there that they don't know anything about credit. So when you say a revolving account, they're like, so it's a credit card or a line of credit.
Right.
Okay.
Right.
I want to make sure because like there's people out there, they watch the podcast because they're trying to become a homeowner or they're trying to learn this important information.
Right.
So
and if you go to a mortgage lender is going to tell you if you don't have a revolving credit on your credit file, go get a secure card.
Okay.
And you need to keep it open, and you need to have a minimum of 6 on-time payments on that card, and you need to keep the utilization under 10%. And that's how you maximize on your points during that time frame. So if you don't have any credit, and we see this a lot with people going through the credit repair process, is we constantly are telling them, you need to get a secure credit card. You need to get a secure credit card. You have to get a secure credit card. And then they're at the end of their lease. They're like, I got to buy a house next month because my lease is up. Well, you still haven't obtained a secure credit card. So if I send you to a mortgage lender, that lender is going to say, you're going to have to obtain a secure card and keep it open for 6 months. We can't approve you where you are right now.
We see that all the time. And not to get off the topic, I know we're talking about this, but not only in buying a home, but just in clients in general. So if you're out there, it is important to know how big credit building is, because I've seen clients say, you know what, I'm not getting the results I expected.
Right.
And every month they get an update. And in their update, it says you need to start to build credit. Then the next month, you had 2 items deleted, but you still need to start building credit. And those 2 items may have like 4, 5, 6 years of age on it. So even though that collection came off, you also lost that age. So they're like, well, how did I go down 10 points? Because you're losing age and you don't have anything to help counter that.
Right, to offset it.
Right, so it's highly important to understand, like, you have to have open revolving credit.
Right, you just can't overutilize it.
I started off checking it every other week, just like most people do. Then it got out of control. I couldn't help myself. I started checking it day after day after day. I didn't realize that I was becoming addicted until my wife said something.
What did she say?
She said, it's just a credit score, relax.
Are you checking your credit score?
Huh? Hold on.
You use it and you pay it off. And, you know, the lender will tell you what type of balance they're going to look for it to maximize on your points. But you have to do it. You have to have some type of revolving credit.
Yeah, and a lot of people have to start off with
secured
credit
because their credit scores are so low, or you don't have any credit. So a bank like Chase, American Express, Discover, they're not going to lend to you when you don't have any credit.
Right.
They don't. You haven't built up your credit trustworthiness yet.
Right. So the thing is, though, is the misconception, I think, that people think on a secured line of credit or a secured credit card is that they think, I got to give the bank $200. But when you close out that secured card, they're going to give you that $200 back.
Right.
Right. It doesn't mean to go and get a secured card and then have it open for 6 months, get your home or whatever objectives or goals you had, then close out the card, because then your scores are going to drop right back down.
Right. You have to continue to build out your credit file.
Right. So in a perfect world, in a perfect scenario, what that person would do is they would obtain a secured card. They would keep that card open for 6 months. And then when their scores are trending up, and then they're able to apply for an unsecured card, that means the bank trusts you based on your credit profile to approve you for a card, and their money is on that card, not your money.
But not to stop your roll, but when you're going to buy a house, it's a little bit different.
No, I'm just talking about just the secure card in general.
No, I'm saying the process is a little bit different. So
Right.
you can't just go out and apply for cards and things like that.
I got you, but no, when you're buying a house, don't apply for just in.
Yeah.
I want to make sure they understand, like, the time frame on when you get a secure card. So if I open up a secure card today, and then 6 months later, then my scores are going up, and I get my house, and then I get an unsecured card, and now I have my unsecured card open. I want to keep that card open for at least 6 months and build some history on that, and then I could close out my secured card, get my 200, 300, whatever I put down on that card, get that back, and that would be the only credit card that I would ever close out.
Slow it down, though, because a lot of people, when you start throwing all of that at them, you may.
Oh, I'm gonna go get all my cards too.
Yeah. I would just one step at a time.
If the best thing to do is rely on the knowledge of an expert.
Right.
So at Masters Credit, the info is free. Like, you call in and say, hey, you know what? I'm here. I'm thinking about doing this. And they're going to give you the steps.
Right.
Like yes or no based on your goals. So if you could get free wisdom and knowledge, it's nothing more valuable than that.
Agreed.
I'm going to turn the show back over to you, and I'll be quiet.
I appreciate it. I'm sure these people would love to hear about real estate.
They will, but they just learned some great tips about credit, about a credit card.
They did.
Never close out a credit card unless it's a secure card. I'm done.
Anything else?
I'm done. I want to drink my water and let you go.
So also another key aspect to your credit file while we're talking about credit files is having minimal amounts of debt on your credit. So a lot of times what we see is that people have a plethora of student loans that hinder their buying power because they're going to count 1% on an FHA loan, 0.5% on a USDA loan. And, you know, if you have $50,000 worth of student loans, you only make $2,400 a month. Well, your buying power has decreased significantly just because of your student loan debt. So you have to be able to save money, because if you want to be able to do a conventional loan where they're going to count what your actual student loan payment is in a lot of cases, then it helps you regain that buying power. But when you go conventional, you have to have a credit score of most of the time 680 or above. So if you don't have a credit score of 680 or above, then you're stuck in this, well, my credit score is 620 to 640. I could qualify for USDA, but I have a lot of student loans or I have a lot of debt, and the USDA requirements with debt to income ratios are so strict that your buying power isn't as strong as it is if you can go FHA and conventional and have your own funds for a down payment.
So the goal is just to put yourself in the best possible position
exactly.
to do whatever you want to.
do whatever you want to do. So again, that does go back into, you want to have the advice of an expert when it comes to your credit and minimizing the debt that you have on your credit file, because that dictates, you know, everybody, the misconception of, well, all I need is a 620 or 640 credit score and I'll be able to go buy a $250,000 house. Well, that's just not true. Yes, your credit does dictate it, and that goes back to the interest rate, what your interest rate is going to be. And yes, it can dictate the amount of house you can buy to a certain extent, but not as much as how much money you're making a month and how much debt is on your credit file.
Right. I can't make $15 an hour and go buy a $300,000 house.
Right.
Because then I don't bring in enough income to be able to
afford that monthly mortgage payment.
In the eyes of the mortgage lender.
In the eyes of a mortgage lender. And also, you know, if you have negative collection debt, they're going to count 5% of that, you know? So I talk to people, we analyze their credit file, you know, they have a repo on a car. Yeah, maybe that repo was, 2-3 years old. They were going through a bad spell or whatever. But they're still going to count 5% of that debt that you owe.
The mortgage lender.
Right. So now a debt that you're not paying on anymore on a car that you don't have is now hindering your buying process.
Earlier in the conversation, I heard you say something about the buying power and student loans, and you said they would count 1%. So how would that 1% impact my buying power? So if I have $100,000 of student loan debt, 1% of that is $1,000.
$1,000. They're going to count that against your income.
They're going to count that against my income.
So if you make $2,400 a month,
right,
just the student loan debt alone is going to put you at $1,400 a month. That's if you have no other debt on your credit file. Then they're going to take, depending on the program, 1% is an FHA product. So if you're going FHA, you're going to bring your 3.5% down. You would take about half of that, which would put you at $700. That would be your buying power on a house.
Are you trying to start or grow your business? Well, welcome to YMA Financial, where we have created the ultimate platform for entrepreneurs and business owners. We specialize in small business startups. Our accredited business consultants will help turn your dream to a reality. We'll help obtain your business documentation, help you establish and build business credit, and whether you're working from home or storefront, we'll help fully launch your business. Check out our website at www.ymafinancial.com or give us a call at 888-531-6611.
So I want to, I'll step back because I want to make sure everyone understands this. I make $2,400 per month.
Per month.
And this person has $100,000 in student loan
debt.
The mortgage lender is going to take 1% of that.
In an FHA product.
So now when you say my buying power, that means how much I can pay per month on a mortgage. So that's buying power. How much I could pay per month on a mortgage.
Right.
Okay.
Because that's going to dictate the amount of house you can buy.
Got it. Right. So if I can afford $700, then that would say that I can afford $130,000. $130,000 home. So the buying power is important in the amount of debt that's reporting on my credit.
Right.
So based on,
we're gonna whiteboard this one night because I think that when people get a visual for it, they can see the numbers and really understand, when the numbers are broke down. And I do it for just about every client that walks into my office. We're going to break down numbers. And before I even send you to the lender, I'm going to have an idea of what your buying power is.
I think that's important too, because even on the credit side, we see people come and they have like a ton of inquiries on their credit and they're not a homeowner. So they was applying, but they didn't get qualified. And I think that's a great thing about how the team works.
Right. And also, a lot of people don't understand that, especially in South Carolina, parts of North Carolina, areas that are growing, are localized areas that we're in. These lenders are so swamped, they don't have time to sit down with people and babysit them through the process. Either you qualify or you don't qualify. Now, they may tell you, go pay this off, and we can rescore you in 30 days and see if your score has gone up. They can do a simulator to see if that's going to help. But they're not going to hold your hand through the process. They don't have time.
Right.
They're doing refinances. They're doing other mortgage loans for people who are ready to go. And so you have to be dedicated to the process.
I think that's what people appreciate about the Pyramid Group is that they like your team walks them through it before they even send that file off for pre-approval. No, you're not ready. We're not going to go and add a ton of inquiries on your credit right now. You're not ready. Let me tell you when you are ready.
Right. And that's why we really would love for other agents to refer their clients to Masters Credit as well, because we understand that a lot of agents don't have time to do that either.
Right.
When you're swamped with business, either they're pre-approved or they're not pre-approved. If they're not pre-approved, I'm not going to go take you to see 10 houses because you're not pre-approved. And most of the time, you're going to need that pre-approval for, especially in multiple offer situations.
That's that Masters Credit Consultants company we was talking about earlier.
So we're always looking at ways to expand the knowledge to other people. So if you have questions about how our process is, or the credit aspect of things, or if your client goes to a lender and you try and they're not ready, then send them to Masters Credit, because it's going to take a load off of you, and it's also going to get them more prepared for what they need to do.
Well, I think the great thing about how Masters Credit operates is the business model that have been created. If an agent or a broker sends their client to us, the great thing is that not only is the line of communication open if they approve it. If the client says yes, keep my agent involved.
In the loop. Mm-hmm.
Right. Then every month when that update goes out, that agent sees it. Like, hey Joe, good job. I seen your scores going up. You're almost there. I did see in the notes that they told you that you need to pay this down. How's that coming along? So it kind of takes
it's a free point of contact for the agents.
Right.
It's you don't even have to do anything.
Right.
You get a free email sent out with you on it to your client, basically breaking out what they need to do. and you've had to do no
No
effort.
work, right?
Right.
And then you can actually see and say, hey, you know what? My client is ready now. I see the
Yeah.
scores. My client is ready.
Right. And a lot of times the agent will call in and say, hey, you know, we have a very thorough method where they can talk to one of the supervisors, and the supervisor can break down and say, okay, you know, we think that this person's ready to, you know, come back over to you or transition back. They're ready for home buying or whatever. And that way that agent knows, hey, I have someone ready to transition.
Right. And even like the top broker, like, gets a email of all their referrals too. Like, here's where all your referrals are at right now.
Right.
So it's a great thing.
So, we kind of got a little off topic, but
Yeah.
that's fine.
That's fine. Just how we do it Friday football and wealth building Monday. But it's good to hit on these topics though.
Right, because we want people to be informed.
Right.
So the next thing that I would say is you have to have income to buy a house.
No way.
Yes. And I say that because we have had people who are on unemployment or who are out of work contact us and say, hey, I want to buy a house. That's good.
Well, hold on. So,
But you're out of work.
right.
You don't have any income.
Right.
They don't count unemployment as income.
Okay.
So all these people that were on unemployment or on unemployment due to the COVID, they got pushed back in the process of buying a house because the lender isn't going to count unemployment as income.
Wow.
So that got comfortable on unemployment. Their employer isn't, you know, making them go back to work right now. And they can't buy a house because they're getting unemployment.
That's why, like, your goals, you have to understand what your goals are in life,
Right.
and make decisions based on like your goals in life.
Right. And those are tough conversations to have because, you know, people get in positions, and I think we touched on a lot about pray, plan, execute. You know, you talk about that in a lot of your lives. And a lot of people, well, I'm praying for this new house, but you're not doing the planning part to be able to execute on it because you're not doing the things you need to do to be able to pre-qualify for a house.
Right.
You're not taking those steps. You're not saving your money. You're going out and spending money unnecessarily, or you're not cutting back your budget to be like, you know, is this something I really need or something that I want?
Right.
To be able to get yourself to the next level.
That's human nature, right? We see that in all areas. But yeah, that's just creating that mindset, you know, having discipline.
But that's what we're here for. We're trying to, you know, teach people that this is what you have to do to get to that next step. These are the sacrifices you have to make, and you really have to start putting this in your plan if you want it to come to fruition.
Yeah. Mental shift. You have to be able to make that shift from like your old thinking into this new way of thinking that's going to help you to propel in life.
Right. I agree. So, any other questions on the credit front?
Yeah, I mean, I got so many questions. how much time do we have? It's a 30-minute show,
I
right?
know,
Because
right?
so can't ask that one. That's like,
But you can ask questions in the comments.
bam, you can.
So, if you have real estate questions, ask them in the comments. You can, we want all the questions that you can give us because that's going to help me to guide you through the process better. So any questions that you have regarding credit, regarding real estate, regarding pre-approvals, even if it's area-specific questions, I'll research, I'll find the answers that you need. So just leave it in the comments.
Wow.
Got this thing rolling.
Got it rolling. But if you have any questions for her or her team, the Pyramid Group, you can contact them at 864-249-1437.
Yeah.
Look, I know all the numbers by heart.
Look at him go, y'all.
Look. Make sure you like, comment, and subscribe. Take 5 seconds. Just pause right there in the lower corner. Click the subscribe button. Good job. Thank you. You guys, we'll see you on Friday for Friday football.
Friday football.
Friday football. Thank you.